Hi everyone, today let's talk about where the pros are putting $10,000 and where we could put $10,000, or at least where we should be investing right now. And then of course we'll take a look at all of the longer term charts because there are definitely some interesting things and not everything looks super bullish. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So where are the pros putting $10,000 right now? They are talking about AI, of course, software is still interesting, but where else are they looking? If you were to fall into a $10,000 windfall, of course, AI, industrials, we've been talking about that. NVDA continues to be massive. Microsoft continues to be massive. The Qs continue to be massive. We've been talking about how that is the best major index right now. Artificial intelligence technology up over 35%. Over the past year, outperforming the Qs, so continues to be very good. That's AIQ. If you're looking for that, does have a little bit of a higher cost, but continues to be very, very strong. Goes a little bit heavier on Palantir, a little lighter on Apple. But the AI play also includes Meta, don't forget about them. And then some of those lesser known ones, AI cloud and infrastructure stocks. Things like industrials are also going to benefit pretty largely from the big AI move. So Japan investing massively in the United States, European Union set to invest massively in the United States. So big players putting a ton of money into AI. Those things are likely to go higher, as we've been talking about. And then, of course, outside of that is interesting. Value indexes, value stocks have been recently undervalued, especially on a price to earnings basis. They have been lagging their growth competitors with relatively lackluster profits, with the Mag 7 expected to grow profits by 23%. The rest of the 493 stocks in the S&P is only growing by 11% over the next year. So that is the concern, right? That's why those other stocks have been lagging. Tech is continuing to do massive, but they are undervalued. Definitely a cheaper place to put money in the short term. Eventually, they will become more valuable once the AI play kind of works its way through the rest of markets. Other plays, small cap value ETF, low fees, very, very low price to earnings ratios relative to everything else. And then, of course, aerospace and defense. This continues to do very well. The U.S. is expecting to spend billions and billions of dollars, way more than before, raising its output to 5% for NATO members, continuing to spend huge in that sector, should benefit over the medium to long term. So look at things like defense ETFs as those continue to receive major benefits, IDEF and EUAD. Looking at Fear and Greed Index, we finished the week at a 59, up from a 56. This was a nice little spike up at the end of the week, and we are back into greed across most metrics, except for breadth. This is the one that has been quite concerning. We've been talking about this frequently on the channel, and of course we'll look at it again today. Breadth has not been improving with the rally. That usually means it's not going to do well in the medium term, but for now everything still looks bullish. Put call ratio turning back down, back into neutral, volatility coming back down, safe haven demand spiking back up, and junk bond demand sitting in extreme greed. Moving over to the AAII survey, the bears came in a little bit hot here, and this is probably why we saw a little bit of a buy up over the last couple days. But if we get into that kind of topping pattern when we start to sell, that is obviously going to be very concerning. But for now, there's just a little bit too many bears in there, which is likely why we saw some buy-ups again. It'll be interesting to see how this adjusts next week, but for now, sentiment is a little too bearish, and the bulls are below historical averages. Moving over to seasonality, right now, choppy period, and that is what we got. We got a little bit of a fall, did rebound from there. I would suspect we're kind of in this range here. I know date-wise, we just finished up the first week here, but next week is supposed to be a little bit more choppy, a little bit more bearish here in that post-election period up until the 19th, and then we kind of start to level out here. I think we're going to get that second drop. The question is when and how aggressive is it, and understand that that is the seasonal bias. Moving over to the seasonal calendar, you can see basically nothing here on the calendar, just a little bit of news this week. This is the August timeframe, which we said is choppy at best, up 12, down 9 for the month, and then the following week, Monday of expiration, up 19 of the last 30, so pretty good for the 11th, and then into expiration week, that is supposed to be a pretty good Friday, so just keep those in mind. Usually bullish in here, CPI, PPI, corn headline, retail sales. Moving over to the economic calendar, you can see corn headlines, CPI for the Tuesday. Those are going to be the big ones really for the week. You can see Core is supposed to step up a little bit for the month over month and the headline and the year over year. The headline number is also supposed to step up for the year over year, but the month over month is not supposed to. So far, we haven't really met expectations on that. Inflation really hasn't been going higher. And then Wednesday, basically nothing. Thursday, core and headline PPI, initial jobless claims as always. And then for the Friday, quite a bit of data here, core and headline retail sales, and then the Michigan inflation data, and that'll pretty much wrap it up for the week. Moving over to Max Pain. For some reason, the other Max Pain chart is not loading, but we'll take a look at that on the Monday. For this week, you can see everything is a little bit lower. Remember, this is third week options expiration. We'll see if we actually end up getting that little bit of a fall here into the expiration. Max Pain right now is 620, so that indicates we should go a little bit lower for the end of the week. Midweek, we can kind of hover in this zone, down only 1%, but that Friday is quite a bit lower. Moving over to the charts, looking at the S&Ps here, you can see we're basically back to unchanged from 2 weeks ago. We had the big down week last week, recouped all of that to unchanged. Now we're back above the trend line. Momentum is still fading here. The RSI did bounce from that kind of zone around the SMA. So we are still back into bullish, still holding structure on the longer time frames, continues to, and we're not quite overbought yet, except for that momentum, which continues to be a little bit concerning, but structurally everything is intact. Looking at the daily chart, you do have a little bit of overhead resistance. We talked about this zone previously. We're getting close to it. Once again, I do suspect we will likely touch that. And then you can see the clean divergence we've been watching on the daily chart. Are we going to get into this zone and reject? If we do, that's going to be quite concerning in my opinion. And then just for those short-term levels, like I said before, like I said in the Friday video, 635.60 is the zone. You have this kind of short-term bullish structure. We've been watching that. We are above the level. We are suspecting that we're going to get a touch of that all-time high, but that SMA again on the RSI definitely concerning. Moving over to the Tasty charts, really no changes here. We're still right at that level, still above the second ATR band, still holding that 9 EMA. So again, structurally still bullish. The volume weighted MACD also rolling to the downside. That is a little concerning as well. And then looking at that daily chart, we've been watching it since we broke that structure down here on 1 August. This is bearish conditions. Your trailing stop right now, 642.34, and this is really the one that's hanging in there. So the weekly is still bullish, the short time frames are still bullish, but this daily chart, we have not eclipsed this previous high, so there is still the chance of that topping pattern. Moving over to the NASDAQ here on the weekly, we have that overhead resistance. Again, this kind of peak zone, we're almost there already. You have just a smidgen more. That's going to be at around 23,780 or so, which really only gives you the potential for about another 0.7% to that next level. Momentum did step back to bullish. RSI is not quite overbought yet. I do suspect that we will get there over the next week. And then looking at that daily chart, we've been watching that short-term bullish structure here. We got to the trend line. That was concerning, but we have that next level in here around 580. That is the next zone that we're watching. And then again, that same kind of RSI thesis, but we are a little bit through it here. So the NASDAQ showing up a little bit more bullish as we can get to that next trend line. So the NASDAQ definitely showing more strength in the SPY charts. Tech continues to lead us higher, which again is something that you do want if markets are going to go higher. Moving over to the NASDAQ on the Tasty charts, you can see that upper ATR band starting to curl to the upside. Again, the weekly chart still very much bullish, not quite to that overbought condition. That upper band is 583.93, almost 584. Do expect that to continue to go here. This is a new record close. Again, structure significantly more bullish here on the NASDAQ, which is good if you're trying to stay bullish and trying to go long. You want to be long the best of the group, which right now is the NASDAQ. You still have bearish conditions on the daily chart, still very much looking at that zone, trailing stop 576.44. Want to see it get through there, looking for that upper band again, 581.67 on the daily, but I do suspect that that'll continue to step up here over the next couple of days. Moving over to the Russell here, the Russell did not recoup all of those losses. 221.49 continues to be your overhead resistance. I still think we can get above that if we get the resumption here to the upside next week, like I do believe we will. SMA bouncing on the weekly, looking for that next level 226, which is your previous recent high. Need to see a little bit more conviction, but I think this can go for sure. I'm just showing that structure. The next trend line is really up around this next resistance as well, just a little bit above it. Probably could move this trend line to fit that high a little bit better. You can see it kind of marks these bottoms. Either way though, somewhere in this kind of 27.50 to 28 zone makes sense for me as a potential turning point if we do get that next leg higher. Otherwise, you have this previous high up here around 29, which is the high from January, February that we're watching as well. And then looking at that daily chart, like I said, 221.50 needs to get above there. Still hovering at that 21 EMA as well as VWAP in there at 221.50. Moving over to the Tasty charts here, we are in bullish conditions for the Russell. We got above that trailing stop back here on 21 July. We're right at the second ATR band for your resistance right now. That is going to be 226.81. Coming off of that 8 EMA, looking for a push to that zone. I think we can get the continuation here. We're back above all the EMAs and SMAs on the weekly chart. And then looking at the daily, still bullish conditions here. Came down to that trailing stop and we didn't close below it. So this was basically the only major index that did not close below that trailing stop. So you're still bullish conditions, despite the fact that we have not recovered quite all the way back to those highs. Looking for that second ATR band, again, 228.64 here on the daily chart. Moving over to the Dow, we had the Dow going up 1.42% on the weekly chart. Again, watching this zone of resistance. This was the peak areas back here in November and February, and we are there once again using that zone as a potential resistance. 441.43 is the level. We did get above that. 445.16, not quite there yet. Can we get the continuation? Seems possible. RSI bouncing off of the SMA. Momentum still fading a little bit, but looking for that continuation or the eventual topping pattern. Either way, we're not quite there yet, and we should go at least a little bit higher. Moving over to the equal weighted S&Ps, these did not recover nearly as well as the other major indices, and this is part of why there is a little bit of a bearish thesis across markets. That big down week that we had, once we got to that double topping pattern there at the 187.60 area, momentum bearish, RSI not recovering, broke down, retested, didn't quite make it to the 184.84 level, pulled back from there. If this starts to break structure, that is going to be quite bearish, and I do believe that it will. That's part of why I think we're seeing breadth kind of decay here. Tech is going higher, the Mag 7 is going higher, but the rest of markets just are not pushing the way that tech is. Moving over to the ratios, looking at SPX over the Russell and NASDAQ divided by the SPY here, you can see massive breakout here by the NASDAQ. NASDAQ was by far the best performer. Like I said, tech continues to do extremely well. If you want to stay long, be long the best stocks, and that right now is the NASDAQ pushing higher. And then you can see the SPY Russell was basically flat on the day. So between those two, you can kind of pick and choose. I would say the SPY structure is a little bit better here, and for this to continue to go a little higher, I do think it's possible, but realistically both of them should continue to go higher. So not really expecting too much downward movement next week, but again, the NASDAQ is the best. Moving over to SPX divided by the M2 money supply, bouncing off of that 28.50 level, headed up to the 30.14 level if it can get above this zone here. Again, momentum is fading, the RSI is bouncing, so structurally this is still bullish, still very much extended here. Looking for that 30.14 level if it can do it. We're still well above this high here. I thought for sure we would get a little bit more follow through 2 weeks ago off of this big rejection back below the level, but that was a head fake, bounced and rallied. Now I'm looking for that bigger continuation to the next level. Still very much bubble territory, but that can continue to go on for many weeks. Moving over to Apple and Microsoft. Apple had an amazing week on the announcements with President Trump 13.3% to the upside. Didn't extend this trend line out. I didn't think this would be anywhere near in play, but it is now. This trend structure up here around 247, 248 in here potentially. That would take you very close to your all-time highs back here. All-time high right now is 260. Obviously wide range between this kind of consolidation top around 241, 242, and then that peak level that we weren't really able to hold, but massive spike, big momentum, big volume. Apple should have some follow through. Short-term levels, 235, 90, and then 241, 80. And then looking at Microsoft, we finally got a down week. It seems like it's been forever here, like 2.5 to 3 months almost, where we haven't had a down week. Massive wick, marked a level, 538. If we don't get above that, that could be a zone to kind of trade a little bit bearish off of. The momentum has been fading. It was obviously super extended after the earnings spike on the back of this massive rally into earnings. Have we kind of topped out here on Microsoft? I could see why people would say this is kind of done here. It's obviously very expensive and everything is priced in at this point, in my opinion. Moving over to Tesla and NVIDIA. Tesla had a good week, almost 9% on the week. Came off of this 21 EMA. We talked about that being a potential zone of support. The level was this 302 area, and then we bounced from that level, pushed through the next two, 313.80 and 324. The next level of resistance is this downtrend line here and 336.67. If we can get through there, I think there's a lot of upside potential. A nice breakout of this zone. You can see this is multiple touch points on the trend line, looking for a bigger breakout if it can do it here. And this was on the back of more robo-taxi news around Tesla, more positive news out of Texas. And then looking at NVIDIA, continues to be straight up here for multiple months in a row. Another up week, 5.17%, crazy there above the 180 level that we tried to put in. There's really no levels to work with. It's just been straight up consistently every single week. We tried to put one at 180 and then we closed above it the following week. So everything continues to be super bullish on NVIDIA. Moving over to Amazon and Alphabet. Amazon was up 3.7% on the week, touched that level 212.25. We said this was a zone of support. Had that level on the trend on the charts here for a while. You can see peak level back here, consolidation range here. Once it broke here, that was a big continuation, but we came down, we tested it after the big leg down from earnings. We bounced back to the middle of the range here between 212.25 and 230. The most recent test was support, so you're looking for a push to potentially 233. I don't really believe we can get there off of that negative earnings. Momentum's a little bit bearish. RSI, it is above the SMA, but it dipped quite a bit below it. I think I would say this is probably neutral at best. And then looking at Alphabet, this was a lot stronger, 6.39%. After just a slight retracement here, pushed back through that trend line, looking for the high back at 207.73. Momentum is bullish, RSI is bullish. It's not overbought yet. I think this is likely to hit all-time highs, and then we'll see what happens after that. Moving over to Meta and Broadcom. Meta up again, 2.5%, new all-time high close. We didn't get above the wicks from the previous week on that earnings announcement, but we did go a little bit higher on a closing basis. Momentum still bullish, RSI not quite overbought yet. And then looking at Broadcom, finally got above this trend line. We grinded along there for about 6 weeks, and now we did get above that zone. If we can get to that next trend line, that's all the way up at 380. I don't really believe that's going to happen, but seems to be continuing. But it seems like chips and semiconductors just cannot stop. They continue to stay very bullish, and Broadcom has been no exception. Moving over to staples and discretionary. Staples had a massive week, 2.83%, big push, engulfed many of these previous weeks here, got back to 283. Couldn't close above it here, but I do think we'll get a little bit of a continuation. Staples could go higher. Really want to see if it can get through here and then push to that all-time high. If we can see some of these non-tech stocks starting to go a little bit higher, that would make me feel a little bit better about the rally. So far, that has not really happened so much. Looking at discretionaries, good week there, 3.5%. Got through the level, 219.18, pushed to this zone of resistance, couldn't quite get through there. I think that's mostly being held back by Amazon. Tesla did help a little bit, so it does look a little better than the Amazon charts, but Tesla needs to push through, and so does discretionaries if it's going to get back to those all-time highs. The next level is that 235.85 level, the peak from 27 January. We're still off of those levels. Again, I want to see discretionaries get back there, and if we can see those stocks that are not tech rallying out, that should be healthier for the rally. Moving over to real estate and transports. Real estate was down just a smidgen, only 4 cents on the day. Momentum bearish, RSI bearish, headed towards that 40.07 level. Again, we said this was peak. We're likely to pull back, and so far that has been true. And then looking at transports, again, it recouped a little bit, couldn't quite get back to even the midpoint of the previous week, and this is why I think we're probably going to see that rally fail eventually. I don't think it's necessarily going to happen next week. I think tech can continue to hold up markets, but we are just not seeing the rest of markets go with it. super well. Moving over to breadth, 20 and 50-day breadths did bounce a little bit. We got to a fairly low level, got a little bit of a bounce. I do suspect we'll get a bit of a retracement. But again, one more week, get into this zone, lower high setup, continuation lower to that 28-21 area. Same here on 50, you want to see it get to 62.25 at least, touch the low of this consolidation, and then we'll see the resumption here. Momentum bearish, RSI bearish, and I do suspect that breadth will continue to fail, but again, tech should go higher, and that'll hold up markets at least one more week in my opinion. Moving over to 200-day breadth, same kind of thesis here. We had this downtrend structure, we got into this zone, we talked about it. That zone has been a sell point. We got here on 21 July week. Next week was a big sell. We've retraced a little bit to this trend line. Do we get back into this range and then get another sell? This continues to downtrend here. I do suspect that this will continue to downtrend. We just need to see that one more week spike up, and then we should get the continuation lower after that. RSI bouncing off of the SMA. Structurally, everything is still intact for at least one more week of bullishness. Moving over to the dollar continuing to show this bullish basing formation off of these lows here. The critical level 96.85 was support. We talked about it. Momentum bullish, RSI still bullish here. A little bit of a pullback week after hitting the next level 99.83, but I do suspect this will hold and then bounce into that 101 to 102 area. Moving over to JNK and TLT, up week for JNK, up 37 cents off of the support level 96.50. As long as this continues to hold structure, I don't believe markets are going to break down. This is an indicator of risk, and so far this continues to hold support in here. And then looking at 20-year bonds, did fall back a little bit, retesting this trend here. Want to see it push through here to the next level, 89.16. 55 EMA there at 90.54. Still think this is a solid base. I still think this is going to go higher. Just a little bit of a hesitation similar to the dollar. Moving over to the VIX. The VIX did pull back to this zone of support where we did bounce the last time. Are we going to bounce again? I don't really think we will. You can see we can hover in here for a couple of weeks before we get a major spike out. I think that's probably what we'll see. You'll probably get a doji candle, maybe a small spike, something small, but momentum is bearish here, RSI is bearish, could even fall to the 12 area. If we did get there, that's usually where you do see kind of spikes come in fairly quickly, but for now, I think we'll see a week of kind of complacency, not expecting a whole lot out of next week. Moving over to my accounts, I was down a little bit on the week. I was trying to short at that kind of double topping area or lower high setup, and we just didn't get that, and then I did flip to bullish, made a little bit of that back, and then here you can see all bullish going into the Monday. Really what I was looking for was continuation off of the big Friday sell, and we ended up rallying against that pretty aggressively, so that squeezed me out a little bit. Either way, looking for bullishness on the Monday. I have some Russell puts, some Q's puts, and then still long some calls here on the dollar. Still think these are all going to go, so looking for some bullish movement on the Monday. Again, think we'll get a little bit more out of it, and I am staying long the NASDAQ because tech continues to be unstoppable. Let me know down in the comment section where you're putting money right now. If you had $10,000, what are you buying? Are you just buying all NVIDIA stock? Are you buying other things? Are you buying a little bit of bonds maybe? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.